So what happens when a single political announcement can literally vaporize billions of dollars in crypto overnight? Well, we're about to find out. A massive tariff shock just sent the entire digital asset world into a complete tailspin. And today, we're going to unpack exactly how it all went down. $19 billion just gone. That's how much wealth vanished from the crypto market in what felt like the blink of an eye. And, behind that staggering number are millions of investors just watching their portfolios crumble in real time. So the huge question is, right, what could possibly cause such a catastrophic drop? This wasn't some bug in the code or a massive hack. No, the answer lies in a geopolitical firestorm between two of the world's biggest economies. Okay, first, let's just try to wrap our heads around the sheer scale of the damage here. This wasn't just a little dip. This was what analysts are calling a total bloodbath. And the panic was everywhere. I mean, look at this. Bitcoin fell over 8%, which is a big deal, pulling it way back from its recent highs. But the pain was even worse for the altcoins. Ethereum down 12%, Solana got hammered by 15%, and Dogecoin, wow, took a massive 22% hit in just a single day. The mood across the entire market shifted instantly to one very simple, very powerful emotion: fear. And you know what happens when fear takes the wheel. Rational thinking goes right out the window, and you just get these massive waves of panic selling. Let's really break down the human cost here. We keep saying $19 billion, but that huge loss affected over 1.6 million individual traders. And what's even crazier, a full $7 billion of that was wiped out in a single frantic hour, 60 minutes. So what was the catalyst? What was the spark that lit this whole bonfire of fear? Well, it came from a pretty unexpected announcement that sent a shockwave, not just through crypto, but across every single global market. This timeline just shows you how incredibly fast everything escalated. On October 7th, things are great. Bitcoin is hitting a new all-time high. 3 days later, boom, the tariff announcement drops, and by the very next day, October 11th, the market was in a complete and total freefall. And here it is. This is the exact statement that lit the fuse. The announcement of a 100% tariff. It basically just reignited everyone's fears of a full-blown trade war between the US and China, and that creates massive uncertainty for the entire global economy. Unsurprisingly, Wall Street reacted immediately, and negatively. The Dow drops 2%, the S&P 500 fell almost 3%, and the tech-heavy Nasdaq took the biggest hit of all, crashing nearly 3.6%. Now this traditional market panic, that's the crucial first domino. Okay, so traditional markets panicked. But wait a minute, why did that disease spread so violently to the crypto world, which is supposed to be separate, right? Well, let's connect the dots. The chain reaction is actually pretty clear when you lay it out. The tariff threat created economic uncertainty. That led to a big sell-off on Wall Street. And because crypto has become more and more linked to traditional finance, it just followed right behind, which then triggered widespread fear among crypto investors. The key concept you got to understand here is market correlation. It's a pretty simple idea, really. It just measures how closely two different assets move together. And lately, well, crypto and stocks have been moving very, very closely. And this number, this is the crucial point, 0.89. An analyst named Sasha pointed out that Bitcoin had a correlation of 0.89 with the S&P 500 right before the crash. That is an incredibly high number. It means when the S&P 500 falls, it was almost guaranteed that Bitcoin was getting dragged down with it. And we can actually see how the big institutional money reacted in the data for ETF inflows. At the start of October, you had daily inflows as high as $1.2 billion. After the announcement, that number just collapsed, all the way down to 198 million. The big money got really nervous and slammed on the brakes. Now, with so much panic in the air, it's really easy to think the sky is falling. But experts are actually urging people to take a more nuanced view. Is this really a fundamental crash, or is it something else? That same analyst, Sasha, argues this isn't a true crash. He calls it a broad risk revaluation. What does that mean? Well, essentially, the market isn't saying crypto is suddenly worthless. It's just saying, hey, the world just got a lot riskier, and it's recalculating the price of holding any asset in this newly unstable environment. So, where do we go from here? Well, the experts are watching three key signals. First, what is China's response going to be? That could escalate things or calm them down. Second, Monday's ETF data will tell us if the big investors are buying this dip. And finally, there's a key technical price level for Bitcoin around $10,850. If it holds, that could be a good sign. If it breaks, we could see a lot more pain ahead. And all of this leaves us with one final, really critical question. The whole promise of crypto has always been its independence from governments and traditional finance. But if one political announcement can trigger a $19 billion rout, it forces us to ask, in a world this interconnected, what does decentralized really mean? So you've probably seen Bitcoin's price dip lately. Is that a red flag? Or could it be the starting gun for a huge altcoin rally? Well, a recent press release makes a really bold argument that it's the second one. Today, we're going to deconstruct exactly how they make that case. All right, so here's how they lay it all out. We're going to walk through their argument step by step. They start with Bitcoin's price drop, then they introduce this whole altcoin rotation theory. After that, they give us a checklist for finding the next big winner, they name a specific coin they think fits the bill, and then they wrap it all up with the big picture. Okay, first things first. The entire argument in this article really hinges on one single event, Bitcoin's recent price correction. But the way they frame it, well, it's not as a crisis, but as a catalyst. Right off the bat, the source material sets the scene. They point out that Bitcoin dropped from a peak of around $126,000 down to about $111,000. And according to them, this is the key signal that gets the whole ball rolling. So we're talking about a drop of around 12%. And look, a drop like that, it can definitely make people nervous, right? But what this article does is immediately try to reframe that feeling. It basically says, hey, don't worry, this is actually a good thing. They call it a healthy, even expected reset. You know, a way to shake out the weak hands and get the market ready for its next big push. So how does a Bitcoin dip lead to this bigger theory? Well, this is the core of their argument. They use this exact moment to introduce a concept they call the altcoin rotation. And that leads us to the million-dollar question that this whole press release is built to answer. If money's taking a breather from Bitcoin, where is it headed next? And their answer is this: altcoin rotation. The article defines this as a predictable cycle. Basically, traders who are hunting for those bigger percentage gains start moving their money from a stable, consolidating Bitcoin into smaller alternative cryptocurrencies. And this is where their argument gets really interesting. They don't just state the theory, they try to back it up with history. They point to 2017 and then again to 2021 and say, look, we've seen this movie before. In both cases, Bitcoin took a little break, and what happened next? A massive, explosive altcoin season. And the big claim they're making is that we are right on the cusp of that happening all over again. Okay, so let's say you buy into their premise that a big rotation is on the horizon. The next obvious question is, how do you even begin to find the potential winners in that scenario? Well, the article claims savvy investors start hunting for projects with a very specific list of credentials. And here's that checklist they lay out. According to them, it's not just about luck. Investors are looking for real signs of a project's health and potential. They want to see verified security audits to know the code is solid, a clear roadmap showing where the project is going, a community that's actually growing and engaged, and real momentum, like early traction and plans for new exchange listings. And this, right here, is where the article makes its big pivot. After setting up this whole market theory and giving us the ideal investor checklist, it zooms way in on one specific project that it says checks all those boxes. The project in the spotlight is MagaCoin Finance. So you see what they did? The press release shifts gears from this broad market analysis to what is essentially a focused case study, presenting this one altcoin as the perfect answer to the search they just described. To really drive the point home, the article directly ties the project back to that checklist we just saw. It makes a big deal about the project passing security audits from two different firms, Certic and HashX. See, they're directly ticking that first and arguably most important box, verified security. And then the source adds a little extra weight with this quote. It claims that some unnamed analysts view the project as a potential leader for the next wave of altcoins. This is clearly meant to serve as a kind of outside validation for their argument. All right, let's zoom back out for a second and just look at the full story this press release has built for us, from A to Z. This table really nails it down. You take a real market event, Bitcoin's price dropping, and you interpret it as a healthy reset. According to the source, this creates the opportunity for money to flow into altcoins. It argues that all that investor anxiety actually creates a chance to find solid, maybe undervalued projects before the next big boom.
So here's the bottom line. The entire article is constructed to lead you, the reader, to a single conclusion, that this moment in the market, this little dip after a big run-up, isn't something to fear. Instead, it's a strategic window of opportunity, but only for those who are willing to look beyond just Bitcoin.
So when you put it all together, it leaves us with one big question, doesn't it? The source has laid out this really compelling story, using historical patterns to make its case. But is what we're looking at here a predictable market cycle, something you can set your watch to, or is it just a really, really good sales pitch? That's the lens you have to view this through. Thanks for tuning in.
Okay, so a massive shockwave just tore through the crypto market, and pretty much everyone is asking the same thing. What on earth just happened? Today, we're going to break down that billion-dollar plunge, dig into why it happened, and then look at some pretty surprising ideas about what could be coming next. Let's get right into it. Let's just start with this number, $19 billion. Wow. That is the staggering amount of money that was just wiped out across the entire crypto sector in this one sudden downturn. It's a number that's kind of hard to even wrap your head around. And you got to understand what this number actually represents. This wasn't just people selling their coins. No, this was leveraged money. We're talking borrowed funds being forcibly liquidated. Just poof, vanishing from the market in a matter of hours. Right, a $19 billion earthquake doesn't just happen out of the blue. So the big question is, what was the trigger? What was that first domino that fell and set this whole crazy chain reaction off? Well, to figure that out, we have to look at the biggest player in the game. And that, of course, brings us to the main event, Bitcoin itself. All of this turbulence, this chaos across the entire market, it really kicked off with a super dramatic and sudden plunge in the price of the world's OG cryptocurrency. And I mean, the drop was incredibly sharp. The price fell 9%, which is big enough, but look at that daily low on the chart. It actually dips to almost $104,000 for a moment. That's the kind of extreme high-speed volatility that just completely spooks a market and triggers chaos. And here's the immediate fallout. That price crash directly led to $5.6 billion in liquidations. And get this, that's just for the traders who are betting on Bitcoin. Just Bitcoin. So to really get what's going on, you have to understand this term, long position liquidation. Let me break it down. Imagine you borrow a bunch of money to make a huge bet that the price of something is going to go up. But it doesn't. It crashes. The system then automatically and instantly sells all of your assets at that new crappy low price just to make sure the loan gets paid back. It's basically a ruthless automated margin call that wipes you out. So all of this leads us to the next big question, right? We know what happened. A price drop caused a ton of liquidations. But why? Why did the price drop so hard in the first place? What was really going on? Well, it was kind of a perfect storm. For starters, you had a lot of investors who had made some good money, and they decided, you know what, it's time to cash out and take some profits. That selling started to increase volatility, which made other folks nervous, and then they started selling. It just created this domino effect that dragged the whole sector down with it. But here's where the story takes a really interesting turn. Just as everyone was freaking out about this short-term chaos, a totally different story started bubbling up. One that looks right past the immediate damage and focuses on the future. And here it is. Analysts began pointing out that, hey, despite this huge plunge, Bitcoin might actually be getting ready for a major price surge. And their whole argument comes down to this predictable, repeating event that's literally baked into Bitcoin's programming. And that event is called the halving. It happens about every 4 years, like clockwork. It's a core part of Bitcoin's design. Basically, it cuts the reward for creating new Bitcoin in half, which means the supply of new coins entering the market gets a lot scarcer. And this simple timeline shows you the historical pattern that the analysts are all looking at. First, you have the halving event. That slows down the new supply of Bitcoin. And then, in every previous cycle, a huge price increase is followed in the months and years after. It's a classic supply and demand story. So, what are we supposed to do with these two completely opposite stories? You've got a brutal, chaotic crash on one side, and this idea of a predictable surge on the other. Well, that brings us right to the main takeaway here. This slide really lays it all out.
Over on the left, you've got the short-term reality, a terrifying plunge fueled by fear and pure volatility. But on the right, you have the long-term potential, this hopeful pattern that's driven by the fundamental code of Bitcoin. These are the two faces of the crypto market, and they are both happening at the exact same time.
And that is really the heart of it all. This whole event is the perfect example of what it's like to be in this market. It's this constant battle between the wild, high-stakes risk you see day to day and these long-term, data-driven trends that hint at a completely different future. Which leaves us with one last massive question to think about. When the short-term market can wipe out billions of dollars in the blink of an eye, can you really put your faith in long-term historical patterns? Is that old warning that past performance is no guarantee of future results more true here than anywhere else? That is the billion-dollar question.